our studios in Atlanta, this is Car Biz Today. And here now, Bridget Fitzpatrick.
Hello everyone, I'm Bridget Fitzpatrick. Thanks so much for joining us today for the Kerrigan Market Update. Today we're joined by Erin Kerrigan, Managing Director for Kerrigan Advisors. Erin, thanks so much for joining us today.
Thank you, Bridget, so much for having me.
What's your view on how the market did in December?
Well, December was really quite an impressive month for car sales. We were all very pleased to see that car sales far outperformed expectations. We came in at a 17.7 million SAR as a result of 1.6 million vehicle sales in the month. That was the second highest month for the year. With that kind of month, the year of 2018 turned out to be another strong year of car sales overall. We had 17.3 million sales in the year, which makes 2018 the fourth consecutive year of over 17 million car sales. That's pretty remarkable because we've actually never had 4 consecutive years of over 17 million car sales. Very pleased to see that the market is robust, the economy is strong. While interest rates are going up, that doesn't seem to be affecting car sales too much because, frankly, incomes have also been increasing.
With that in mind, how did the Kerrigan Index perform in 2018?
Well, that's the interesting thing. There's a little bit of a paradox going on because, as most of us noticed, December was a pretty awful month for the stock market and likewise for the Kerrigan Index. For 2018, for the full year, the index was down an abysmal 17.7%, and actually it's now skirting around the lows we saw in 2016. To remind everyone, those lows were hit because the market really realized that we were hitting this sales plateau and there was concern that earnings growth would slow. But interestingly enough, earnings growth continued for these car companies, these auto retailers, and so we saw the index improve from 16 through to 2018, but in 18 it started to decline. To give you a sense of how poorly the index performed in 2018, the S&P was down around 6%, but again, our index was down 17%. What is interesting to us is that Carvana, a new darling of Wall Street, actually was up 60% in 2018.
What do you think Carvana means for the future of auto retail?
That is a very interesting question to answer. I do think Carvana's tremendous success both in growing their sales in a market that's flat and also in growing their valuation is an indication that investors believe online retailing is going to be very much coming to auto retail. It's not surprising in some regards to see the success of Carvana. If you look at Amazon, it's amazing, but Amazon is now the most valuable company in the world. It is surpassing now Microsoft in valuation. And really the power of Amazon is really shows us that retailing is becoming an efficiency game. And I do think that that's what Carvana's bringing to auto retail. I would expect other companies to really take note and to see how they can insert some more efficiency and more online sales to their business to increase profitability by effectively taking out the cost of sale.
What do you think about AutoNation's restructuring announcement?
Well, AutoNation's restructuring announcement is a similar kind of issue that they are trying to address. They're looking at how expensive it is for them to operate their business and ways they can take out expense to again become a more efficient retailer. They've consolidated the management of their regions from 3 to 2, and that makes sense because the name of the game today is efficiency, and that is what they're going for.
How were buy sales in 2018, and what does this mean for the buy sell market for 2019?
2018 was an incredible year. We don't have the full year's data yet, but just looking at our third quarter Blue Sky report, you can see that we are tracking to one of the most active years on record. And what we've really seen is there are more sellers coming to market. They are very aware of the fact that, again, technology and efficiency are probably going to be the name of the game in the near future, and to invest in technology and to invest in new sales models, maybe one price models, you need a really deep well of capital and a big balance sheet. many operators that own 1, 2, or maybe 3 dealerships just don't feel that they can take those kind of risks to reinvent their sales model. And so more and more are looking to go to market. What is exciting is that on the flip side, we do have a tremendous number of buyers, a growing pool of buyers who have tapped into new capital sources and are looking to invest in auto retail because auto retail is the largest retail industry in the U.S. and the evolution of the way we retail is probably going to make many, many people very, very wealthy as we look to increase the profitability of the front-end sales model, which we think is going to happen as you, again, increase the efficiency of the model by reducing, frankly, the expense associated with delivering a sale.
Thank you, Erin, for your insight and commentary, and we're looking forward to speaking with you again soon.
Thank you so much, and I hope you have a great rest of the month and look forward to talking to you in 2019.
Thank you for watching the official news source of the retail automotive industry. This has been a JBF Business Media production.